Crypto was rallying, confidence was building, and for a moment, it looked like the market had found a reason to move higher. Then the ceasefire started to fall apart, and suddenly things are not quite so simple anymore. Because right now, we have two things happening at the same time. On one hand, geopolitical risk is creeping back into the picture again. On the other, the Nasdaq has just opened the week with a massive gap lower. And when you combine those two forces, you get a market that looks strong but feels uncertain. Welcome back to the Daily Breakdown. This is where we focus on what is actually moving the market, rather than what headlines suggest should be moving it. So let's start with this, of course, the ceasefire and how it's starting to crack. Over the past 24 hours, the temporary ceasefire between the United States and Iran has shown signs of weakening. Reports suggest that negotiations are becoming very strained and the risk of renewed escalation is increasing again. Now, this does not mean that the ceasefire has completely collapsed, but it does mean that the certainty the market was pricing in is just no longer there. Crypto has started to lose some momentum. Bitcoin is struggling to push higher and risk appetite has become more cautious yet again. Markets do not need bad news to fall, they just need less good news. Optimism is great, of course, until it starts to expire. The situation we have now is more complicated than it was a few days ago. Before, the narrative was clear: ceasefire equals lower risk equals higher prices. But now, the narrative is uncertain again. So, what has changed? The ceasefire is no longer fully trusted. Oil prices are stabilizing instead of falling, and markets are starting to hedge their bets again. This creates a very specific type of environment where one market hesitates, not because they are bearish, but because they're no longer confident in what's going to happen. It is the financial equivalent of saying, let's just wait and see. So, while everyone has been focused on geopolitics, there's another massive development that matters just as much. The Nasdaq opened up with a massive gap down of roughly 400 points, obviously pricing in the potential ceasefire breakdown over the weekend. Gaps like this are not just random, of course. They represent the imbalance between buyers and sellers, and more importantly, they always do tend to get filled. If the Nasdaq pulls back even more to fill that gap, it could create short-term pressure across all risk assets, including crypto. You see, the mechanism is something like this. The Nasdaq drops massively, risk sentiment weakens, liquidity tightens, and cryptos, of course, will follow. Gaps have a habit of being revisited in markets, usually at the most inconvenient times, of course. From a price perspective, Bitcoin is no longer showing the same strength it did during the initial rally. What we're seeing right now is slower momentum, smaller moves higher, and increased rejection at local highs, which is what we've seen with the BPR that I'll show on screen. This suggests that buyers are becoming less aggressive, and in a macro-driven market, that obviously really matters. The $70,000 level remains critical. Holding above this area will keep our structure intact for a potential move higher. Losing it opens the door to a move back into the mid 60k range, or maybe down to 60k again. At this point, 70k is doing more work than most support levels. Another subtle change that is happening beneath the surface is, of course, earlier in the week, buyers were stepping in quickly and momentum was building, but now the move seems slower and more cautious. And this suggests that the market is transitioning from momentum to evaluation, or potentially just waiting to see what kind of news we'll get today. Momentum markets move quickly, as we know, but these kind of choppy sideways markets we've seen recently obviously continue to accumulate and move sideways or trickle to the downside. In other words, things are getting a bit less exciting. As usual, altcoins are reacting more strongly than Bitcoin though. Weaker follow through, faster pullbacks and reduced momentum, as we have been in a bit of a bear market for altcoins recently with the recent pullback with Bitcoin, and with altcoins seemingly not getting any kind of risk appetite in this cycle so far. Obviously, as we know, when confidence drops, they always feel it first. If altcoins continue to weaken, it could signal broader market hesitation again. They're still participating, just not very enthusiastically at all. Right now, the market is being pulled in two directions, as it always is. We do continue to have residual optimism for the ceasefire, but we do have the rising uncertainty as well on the other side, potential gap fills with equities and slow crypto momentum at the minute. Really nothing that much going on. There's a lot of tension right now, and these geopolitics will be the main deciding factor of where we go next, in my opinion, usually resolving with extreme volatility. Instead of trying to predict the next direction in the market, I would focus on what would confirm it. Firstly, we have Bitcoin at 70k. Holding in this area would signal to me stability and strength, but breaking down again would signal weakness towards probably 60k. We also have the Nasdaq gap. If we start to fill this to the upside and inverse it again, we may see some relief for the wider market. We may see some relief from the wider market for crypto. As we know, Bitcoin is somewhat following the Nasdaq right now, which is reacting to all these geopolitics we're seeing. Obviously, geopolitics also plays the main role. Improvement will signal relief, while escalation will increase volatility again. This, as always, remains a macro-driven environment, and macro just became less predictable yet again. So yes, crypto is still holding up right now, but the conditions that pushed it higher are no longer as strong as they were. And when the reason for a move starts to weaken, the move itself often follows. So if you found this useful, you know what to do, and as always, I want your take. Do you think this is just a pause or the start of a deeper pullback? Because right now, the markets are no longer reacting to certainty, they are reacting to doubt. Thanks for watching.